Welcome to the stock workout, where we flex on the market to make gains. I want to talk about Gamestop, ticker symbol GME. As we've all seen, this stock has risen up from 41 all the way up to now 325. It even touched up here at just 500, just over 500. Now, GameStop doesn't really have any technical analysis. It's been in a short squeeze from big hedge funds. A lot of people have been in on this, and you know what, to start off the video, I'd like to take my hats off to those who have profited from it, because it hasn't been a fair and equal playing field. Now, this short squeeze is where day traders are locked in a battle against big hedge funds, for example Melvin Capital. However, the playing field, as I said, isn't equal. This isn't an equal and fair open market. I mean, if everyone has equal risk and regardless of status, then no platform should prevent anyone from so-called risky stocks. If a person has accepted the risks, then it should all be okay. But as we've seen, Robinhood, Trading 212, they prevented people from placing bets. And I've also come across other people, I've had a few friends whose assets have been liquidated. Now, when it was liquidated, theirs were sold on Friday down here at about 250. Now, if they had bought above it, they would have been in heavy losses, and their accounts were liquidated automatically. All their stocks were sold. That's not fair at all. They contacted the brokers, but they didn't have a reply from them. So this is market manipulation, in my opinion. Now, the only thing that these companies and these brokers wanted to prevent is the risk of the big hedge funds losing their money. It's simple. I mean, there's no other way around it. It's not a risk when hedge funds make billions shorting stocks, but it's a risk when the day traders make money from them. Hedge funds, they make money from retail investors on a daily basis. It's not an equal playing field if retail investors are prevented from buying the stock just because they've made money and the hedge funds have lost out. This is what you call market manipulation. Let's take a look at the situation from a different angle. Hedge funds get together, they manipulate the market and make money, but that's okay. What if we consider retail investors like the Wall Street Bets Forum as one big hedge fund? Why is it not okay that this massive hedge fund makes money? That's some food for your thoughts. Now, we can all get access to see how much a stock has been shorted, so someone is going to make money, the retail investors or the hedge funds. Hedge funds are just sour that they've lost out. Retail investors flex too hard. Now, here's a couple of points that I wanted to point out to you. So currently, GameStop, GME, is shorted at 226%. That is very, very high. Now, if we go look at this article here, Robinhood customers are hedge funds like Citadel. Its users are the product. Now, going down this page a little bit, we can see this bit here. The secret to Robinhood's success and profitability is simple: payment for order flow. To ensure trades are commission free, trades are sold to market makers or large firms such as Citadel. Now, Citadel tried to bail out Melvin Capital after its GameStop shorts cost it billions. Now, I completely agree with this article, because us retail investors, we thought we were Robinhood's customers, but really we're the product. We're the product, and they're selling our information onto Citadel, and Citadel are in a partnership with Melvin Capital after they tried to bail them out, and that's why Robinhood stopped us buying the stocks. If we go to this, we can see that Robinhood and Citadel's relationship comes into focus, and if we go down this page a little bit, we can see here Robinhood routes more than half of its customers' orders to Citadel. So Robinhood's in partnership with Citadel. Citadel are bailing Melvin Capital out. And Melvin Capital are the ones who lost billions. Why do you think we were stopped from buying and selling the stocks and people's accounts were liquidated? It's all market manipulation. Now, Robinhood strongly denied its move was influenced by the large investment firms it works with to execute trades. However, we don't really believe that. Come on, I mean, people's shares were sold by themselves. When you ring up the company, when you ring up Robinhood, they were told, no, we didn't do it. I mean, come on, nobody really believes it. People's accounts were liquidated automatically. This is just complete market manipulation. Now, if we go to this website, Fox Business, Now it says here Citadel is not involved in or responsible for any retail broker's decision to stop trading in any way. And Robinhood CEO even put out a tweet. So here's the Robinhood CEO putting out a tweet. He said these requirements exist to protect investors and the markets, and we take our responsibility to comply with them seriously, including through the measures we have taken today. That is BS. Now these requirements only exist to protect the hedge funds and their business partners, as we can see. So really, it's just been crazy market manipulation. Now, if you bought in at the lows, you would have been lucky. You would have made a lot, maybe 2, 3, 4, 500% on it. But currently, it's been fluctuating so heavily. It's come up from here, 500, went down to a low of 100, and then it's come back up and settled here at 325. Now, the point I wanted to make is this. This is Volkswagen's short squeeze that happened in 2008. As we can see, the price here was just over 200. It went up, nearly touched €1,000, and then it came sharply back down. So what I really want to tell you guys is, if you are in profit, take your profits and walk away. Now, the short interest is at 200%. But as we can see, the market's being manipulated. Companies like Robinhood are indirectly linked to the same hedge fund that is losing billions. They're not just going to let that happen. So my advice to you guys is take your profits if you are in profit and walk away. The same thing can be said about AMC. AMC is in the same position as well. It's been shorted a lot, and the reason why the hedge funds increase their short trades is because they want to make the money back. But some profit is better than no profit. So in my opinion, you should take the profits, walk away, and put the money into your next play. Now, if you appreciate the video, give it a like, subscribe to the channel, and I'll see you on the next one.